Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
We are in the middle of our march to 1,000 videos.
Okay.
We're like 950 or 60 or something.
Okay.
We're closer. We're within 50. I have to go back and count.
Okay.
What's probably going to happen is I'm just going to forget to count, and then I'm going to realize we've done like 115 videos. And then we're going to have to go back and do one and call it the 1,000th video. We did that with our 500th video. I realized we were like getting really close. We just filmed video number 500. That was a few years ago.
Okay.
Okay.
So like, do you count on your fingers and toes, or how does this work?
No, they're like in YouTube it says.
Oh, okay.
I don't, yeah, I can go in. I have to like pull up a list of all the videos and see how many are loaded on there. Okay. So this is what we've got for you today.
Okay.
Case Shiller report came out.
All right.
Case and Shiller are economists, and I don't know that they do anything, but they,
You don't know if they do anything.
I don't know. The biggest thing they do is they track home values and home stuff. They have an index. It's called the Case Shiller Index. It's just anyway. So what's interesting? We're going to go through this because there's some things in here I found interesting that were contradictory and stuff, and I'm like, okay, he's probably trying to buy a house. That's why he's telling people, hey, you should not try to buy a house right now.
Okay.
Because it's going to get worse.
Okay.
He kind of says that. He alludes to. But it's interesting because we're going to go through and pick at some of the things he said. Okay. Name of the article, Home Prices Cool in January, Even Falling in Some Cities. S&P Case Shiller says, this was published in CNBC on their online thing. It's what's funny is even falling in some cities. Like in some cities it fell. The home prices in January.
It just sounds so specific.
Yeah, so specific. But you always, when I read these, I read the headline and then I get into the dig and I'm like, okay. So here's these are two of the key points from the article. One was that home prices have been falling for 7 straight months, which we knew, right? But the decline was a bit smaller in January due to a brief drop in mortgage rates. So the decline of the last 7 months is less. And it's saying it was due to a brief drop in mortgage rates, but mortgage rates are still much higher than they were January of last year. Mm-hmm. But then you're going to find out the year over year January change in price. And literally you have to ask yourself a question. If the drop in mortgage rates caused the home prices to start not go down as fast, then why is a massive change in interest rate year over year? Actually, we're going to find out year over year home prices are up. Like it literally doesn't make sense. It's the opposite what you would think, right?
It is. I think journalism is not what it used to be.
No, it's super subjective. It's all clickbaity. I'm going to do a video where I have this tool where I can go in and see what search terms are highly searched by people. Mm-hmm. And you're going to be shocked that terms like 2003 housing crash imminent, things like that they either have no score. They don't actually score them till they get up to like 20, I think. And then they go to 100. Mm-hmm. And 100 is literally, it's a highly searched term. It's like in percentage blocks. So it's the most highly searched terms. Those terms are all 90 somethings. Mm-hmm. So people are searching. That's why people are making those videos. If you look for anything that's not that, it has a much lower search term. Like most of the headlines of videos, we have a much lower search term because people aren't looking for actual data. They're looking for this crazy stuff.
So what you're saying is that the crash bros are simply serving up what their audience is looking for and not actually dealing in either what they think, believe, or in fact. It is just serving up what people want.
If you were pretty darn sure that some asset you owned was going to drop 40 or 50% in value, would you sell it?
Yes.
Okay. I actually know a person, a female real estate agent in this market, who bragged last spring that she went to all her investors and told them that their rental homes would all crash 40 to 50% in value, that they should sell them now, even though they have to pay all those taxes, and then come back in a year and she'd be able to buy the houses back at 40 to 50% less. And I sent her a message on Facebook, said, oh, so you sold all your houses? Because I was going to look her up in the tax record. She goes, absolutely not. She goes, my rentals are doing just fine. And I'm like, oh, okay. So you told, and she had a number of how many people, it's 30 to 40 people that listings that she sold from her investors. If I was one of those investors, I'd be super pissed. We've never told anyone you should sell your house. We've never seen you should buy a house, right? We just give information, let people make their own decisions.
That's true.
Yeah.
That's true. Oh my goodness. Yes. I mean, look.
I should pull up the message. I got to go back and find it because like I said, it was last spring. Like just scratch her face and her picture and her name out.
Let's not. Let's move on.
Okay. That's probably not right. One of the interesting things it did say in here was that it said prices fell in cities such as Seattle, San Francisco, and San Diego.
Well, that's misleading too, because, okay, I mean, I'm not as intimately familiar with Seattle. Yes, San Francisco. San Francisco is really small. So to say that prices fell in San Francisco, well, that's fine. But San Francisco is actually a really small city. The Bay Area is obviously far greater. So that's really kind of misleading it as well. And then when you're dealing with San Diego, that's a whole different situation. I mean, we've had lots of messages on the videos from people who live in San Diego, and that's not what they're telling us, and that's not what we're seeing when we're looking at the San Diego numbers either.
It is absolutely doesn't make sense. The San Diego median sale price has gone up $40,000 in the last 5 weeks.
Wow.
Okay, median sale price. This is directly tracked from the MLS, like pulled out of the MLS. This data. Okay, looking at weekly amounts of closings, 5 weeks. $40,000. This is closed sale price. The market is actually, I texted an agent in San Diego and said, hey, what's going on? I'm seeing all these really expensive homes come on the market, nothing in the lower end. And his thing was, our market is on fire right now. Mm-hmm. Those are words he said, on fire right now.
There we go. Okay, moving on.
Okay, here's another problem. This data, remember, it's April and it's like April, basically. Well, it's the very, very end of March.
Yep,
this is January data. We already know prices are going up in Vegas because we're seeing it. It's happening. We have the data. Every week we show you the closed price per square foot is rising. The price of new listings are all coming on the market higher. Prices are going back up. Now, they'll jump back in and talk about, year over year. But last year was absolute fantasy land. Mm-hmm. People were just panic buying and paying whatever to lock in a price. Mm-hmm. That was not the baseline. That's what prices are up 40%. Mm-hmm. You can't take that as the metric and judge that based on what happened. I did this video where I showed the chart of home prices basically going up, and there was a little hump at the top. I said, if you just cut off that hump, home prices are following this pretty relatively predictable trajectory. And people are like, oh no, you can't cut off that hump. That's the peak. We have to talk about peak to trough. Well, let's start talking about last month to this month, because that's basically pretty important too.
Right. So, I mean, the bottom line is, inventory is still low. Prices are definitely, depending on where you are, they're either stable or increasing. That's not to say that everyone's participating equally. So if the house down the street sold for less money than expected, you have to kind of consider the market as in its totality, not necessarily individual instances.
Right. The other thing that's unfair about San Francisco is, I believe, in a couple years, first of all, we actually seriously looked at investment properties there. I think there's some serious deals in San Francisco. Mm-hmm. If you're willing to dump some big money into real estate, in residential real estate, in higher end properties, I think that's a place to go. Mm-hmm. I think there, remember 3 years ago, something would come on the market and immediately sell for over list. Like there was literally nothing on the market. Anything that was on the market was either ridiculously overpriced or absolutely trashed. Mm-hmm. And other than that, everything else that was reasonable was selling almost instantly. Right, and now if you go on Zillow or Realtor.com, you'll see, I prefer Realtor.com, but there's a ton, because it's updated quicker, there's a ton of stuff. There's a ton of, the whole area, the downtown area and everything is absolutely bombarded with beautiful properties. You'll be
Right.
shocked. You're like, you might say, what? 1.3 million is a lot of money. I'm like, yeah, but that was, 1.6, 1.7 a couple of years ago. Remember, nowhere else can you say that, because everywhere else, when you see a property 400,000 or 500,000, a couple of years ago it was 300,000.
Yes, I mean, there are some beautiful properties in San Francisco proper. Some of them are the beautiful Victorian, some of them are more modern, but there are some beautiful properties. And if you're looking on there, you can see what similar properties have sold for over the last couple of years. So you can see that there's definitely they're definitely taking a haircut at the moment.
Yeah.
So that just means that there is an opportunity there. And we've kind of talked about that there are opportunities in every market, and that's an opportunity. Somebody put a comment in one of the videos that we did, I think it was the beginning of this week, and asked, well, where are the opportunities in Las Vegas? And I said, they're around. You just kind of have to keep your eyes open. I have investors that are texting me literally daily, not the same person, different investors texting me daily, asking me, if I have any deals for them. So investors are out there definitely hunting for deals. There are deals to be had. There are even deals to be had in the MLS. You just have to have a little bit of vision and a lot of patience.
Deals are harder in the MLS because everyone can see them.
They are.
And these flippers are texting you, and the investors are texting you because they are trying to see if you have a pocket listing or a brand new probate that popped up that they can just grab without going in the MLS.
Right, because they're looking to not compete.
Right.
Right.
Okay, here's another quote from the article. Now remember, they told you how bad things were. Home prices cooled in January, up only 3.8% nationally than they were a year earlier, which is the normal. That's the normal, like long-term historic home prices are up usually. According to the S&P CoreLogic Case-Shiller U.S. National Home Price NSA Index, it's down from 5. So the home prices January up 3.8. In December they were up 5.6. Right? We're seeing this number shrink. What we're going to have this spring, even though home prices are going up right now, it's that number is going to decrease and to go to a negative because of the home prices that were paid in 22 were absolutely ridiculous. Like they were super high. One market where this is super obvious was in Salt Lake, where I was looking at median home prices and they were going like up 10,000 a month. Then they had 1 month where they spiked like almost 100,000. And I'm like, okay, something weird happened that month. Maybe it was just a bunch of high-end homes sold. And then they went down the next month back to the normal level. And they were actually literally the same after that 1 month. And then somebody complained that home prices were down like 15% in Salt Lake City in just 6 months. And I'm like, no, they weren't. Home prices are literally the same. They haven't changed much in the last year. They've gone down a little. But you can't just take the one peak and say, okay, that's the benchmark. I'm going to use that. Because what's going to happen here is, we're going to look back at November and October and count the sales. And we're going to look at today and count the sales. There are more. But everyone else, the crashers are still going to reference year over year sales. But if you go back to the fall to today sales, there's more sales.
Right. So, there's less inventory. So that's part of the reason why there's all this fluctuation in how people are looking at this.
Yeah. The 10-city composite rose 22.5% year over year, down from 4.4% in December. The 20-city composite also rose 2.5%, down from 4.6%. So all these numbers are really similar. Kind of everyone has their own numbers. What's really interesting, everyone has different inventory numbers. It's anywhere from 9-something to like the high 6s, 100,000s. So high 900,000 homes on the market in the U.S. to the high 600,000 homes. So we're off by like 300,000. I think one is just counting single family homes, and the 900 one is counting all property types that are purchasable.
Okay.
And then, but that number is normally 2 million. It's normally 1.5 to 2 million. Okay. That's what we have normal in like a normal market.
Well, we haven't had anything normal in a while, so we may have to redefine what normal means.
Okay, here's another quote. Prices were lower year over year in San Francisco, Seattle, Portland, Oregon, San Diego. They were flat in Phoenix. Yeah, the San Diego one, I mean, certainly that was more than likely, 2022 was just a big year. Mm-hmm. But I'll tell you right, San Diego's super hot. Go on Realtor.com and just start searching around San Diego and tell me what you think of home prices. And say, it's not like they're there's nothing. First of all, there's very little on the market when you go look. And then second of all, you realize everything's super expensive. Like I think median prices there have got to be $850.
Right, but I mean, we've talked about this before. When you're looking at the cost of living index, and if Las Vegas is 100, and San Diego's 140, so everything is going to be a lot more expensive in San Diego from our perspective, regardless.
Sure, yeah. You also have this I call it the California effect. All the people that moved from LA and the Bay Area that moved down that sold houses up there, they have a ton of equity, and all they're doing is transitioning that equity out of one house into another. So that's why when somebody says, how can a house for $2.4 million, in La Jolla just sell for cash? Well, because somebody sold their house in San Francisco, said I'm moving to La Jolla. They sold their house, they took the cash out, and then they ran down there and they put the cash into another house.
Right. I mean, look, people have different circumstances. There are people who maybe have been working for an employer for a while, and they had some stock options, and those came due, and they cashed those out, and now that they're a little flush, and they can put it in real estate. There are all sorts of reasons why people have cash available to purchase.
I actually know some people in the Bay Area. I was talking to them last week. They said, "Hey, we're buying a house." I thought that's great. They work for tech companies that are not furloughing them or reducing staff for them, and they have a bunch of stock options that they've been getting over the years. And there's a lot of that. Talked to another person who is in the space industry, and apparently SpaceX, even though it's a private company, their shares being purchased. You can sell there's ways to sell your shares that are not on the public market. So there are people buying those shares, and people are taking some money out of their stock and stuff and using it to buy real estate. Here's another one. Miami, Tampa, Atlanta, again, saw the hottest annual price gains of the top 20 cities. Miami prices were up 13.8%, Tampa up 10%, Atlanta 8%. All 20 cities, however, reported lower prices in the year ending January versus December. So they're saying that if Miami was up 13.8% in January, December it was up higher than that, the year over year prices. Okay. And we knew that. We knew that we've shown this on a bunch of slides before. But I thought they made it sound really terrible. Then you realize that it's not the whole U.S. The other thing that's interesting is these cities all have it's not like they magically have lower interest rates than that they get somehow interest rates are still 2 or 3% there.
No. So look, we all share the same interest rates nationally, but remember, everybody's interest rate is actually different because it's based on your credit score, it's based on your debt ratio, it's based on a whole lot of other things, it's based on your relationship with your lending institution. So you and I can go into the same lending institution and walk out of there with completely different loans.
Yeah, totally different. Like I said, somebody they got a 5.6% 30-year fixed. And they're not putting, 50% down or anything.
Right.
Yeah. Okay, here's the next one. Home buyers may be seeing more flexible sellers this spring, but there's still too few homes available for sale, which we knew. Mortgage lending may also tighten in light of pressure on the banking system. I don't know where they get this and where this quote comes from, but mortgage lending and banking are two different things. Banks take your money that you deposit and they loan it out to people. They buy stuff, they invest in stuff, and then it's arbitrage. It's money arbitrage, right? Mortgage lending are usually mortgage companies. The top mortgage lenders in the U.S. are not banks; they're mortgage companies, and they originate mortgages and then they sell them on the secondary market. So in the secondary market. Yes, there are banks that participate in mortgage lending. There are regional banks, big banks, and too. But I don't know that the pressure on the banking system, that they still have to deploy money. And right now, if you're a bank, what a better way to deploy some money instead of buying a 3-year, or whatever, or a 3% 1-year treasury versus giving somebody a 6.4% 30-year fixed and saying, hey, I'll loan you some money at 6.4%, right? So I don't know that that's true. I think it's opposite.
Well, I think there is some truth to it, because I think when you're looking at regional banks, I think they're going to be much tighter with the lending because they are concerned about their liquidity.
Okay.
So I think
So you think they're going to hang on to cash?
I do. I think that they are going to hold on to cash. So I think they're going to be tighter with that. I think that the qualifications are going to get tighter in an effort to not do as many loans,
Right.
so that whatever loans they do originate are going to be extremely solid loans. Not that they haven't been, but they're really going to take extra steps to make sure that whatever loans they originate are extremely solid. But they're not going to maybe originate as much because they're going to try to stay more liquid in light of everything that's happened. I don't know that the big banks will take the same approach, but some of the big banks are no longer looking to originate loans. Like, for example, Wells Fargo made a point to say that they were getting out of the loan business except for their existing clients.
And they had some other carve-outs.
Right.
But it's basically portfolio clients.
Right.
If they're managing $5 million of your assets, hey, they will work with you because they realize that some other bank may say, because this is what Silicon Valley Bank was doing. Silicon Valley Bank was going to some startup founder or venture capital guy and saying, hey, why don't you refi your house? We'll give you, because we've got all this money, we have to do something with it. We'll give you a 1.5% 30-year mortgage on your, $5 million house. Mm-hmm. And, we want a good relationship with you because that venture capital guy is going to tell all the startups he's investing in, everybody to go put their money in Silicon Valley Bank.
Right. And remember that all these companies actually, that they're raising money, so they actually do have quite a bit of cash that they are depositing. So there was this whole nepotism kind of thing going on there.
It was really bad. I think it's the worst. It was the worst example of a specific industry that was literally like, could you imagine that when someone says, yeah, I just refi, and they're like, people are always curious, well, what did you get? Because people are competitive and people compare. And they go, what did you get? 1.5. Well, how did you get 1.5? Well, I used Silicon Valley Bank. Oh, well, I use Banana Bank. And they're like, well, they only do it because they have like a lot of money there. And they're like, well, I have a lot of money. So they go call Banana Bank, and Banana Bank goes, yeah, we can give you like 2.3. And they're like, well, and then you call Silicon Valley and they go, oh, well, if you put $5 million in our bank, because if you put $5 million in, the reserve ratio is 10%, they can loan out $50 million. Mm-hmm. So they go, well, if you deposit $5 million, we can do that deal for you and whatever. So they're like, fine, I'll just put it over there, right? Mm-hmm. And then they do the deal. There's a lot of that. I personally know that there's some people with sub 1% mortgages.
Yeah, it's crazy.
And they're on $1 million houses.
Yeah. It's pretty crazy out there. All right, what else have you got?
Okay, this is the last thing. More expensive, less available borrowing, especially with an unclear economic outlook, is likely to continue to limit buyer demand, which is maybe true. Though home sales are expected to rebound in line with seasonal trends, this spring sales pace is expected to remain lower than last year. We were certainly not so optimistic. We thought this would beat last year. We said certainly it wouldn't beat last year. As uncertainty and high cost limit activity, said Hannah Jones, economic data analyst for Realtor.com. High cost limit activity, yeah, and uncertainty limits activity. Mm-hmm. But here's the thing. We have probably a recession in the second half of the year, okay? We certainly have housing, which is super expensive. Mm-hmm. We certainly have uncertainty in the markets, mm-hmm. in all the markets, equity markets, in everything. But at the same time, let's look at the other side of the equation, because all those certainly are what the crash bros are talking about. What don't we have? We have 0.5% of all loans are variable rate loans. Everyone's got it fixed. And we already did the math where it was like 72% of all loans are under 5%. So those are 2, 3, and 4% loans. The housing market's locked in pretty tight. 0.67% of all home loans, only 0.67% of all loans are in default, meaning they have missed at least one payment, right? The bank's getting ready to foreclose. You can't just foreclose. You have to meet certain criteria. So you can't just say, we're going to foreclose on all these houses because whatever reason. Nope, they're making their payments. So people are making their payments. That's the forward-looking stuff. That's the stuff. The wave of foreclosures, there's nothing to prove that's we just did a foreclosure update in Las Vegas. If it was going to happen, it would happen here, probably more than anywhere. and the numbers are actually ridiculously benign. Remember we had 522 foreclosures in all of Vegas for all of last year. Great financial crisis, we had that in 2 days.
Right, but the other thing to keep in mind is that regardless of the missed payments, the banks have learned their lesson from the last time around.
Yeah.
So they're not quite so quick to foreclose. They are much quicker to try to work with the borrower, to encourage other things, because they know that foreclosure is actually not profitable. Okay. Now, not in all instances, obviously, that there's quite a bit of equity that then foreclosure could be profitable. However, if there's quite a bit of equity, then the borrower would go ahead and sell the property and make the bank whole and put some money in their pocket. So banks have figured out that there are other tools in their toolbox besides foreclosure when a borrower misses a payment.
And the whole thing about foreclosure is it does not. There's this myth that the foreclosed homes are cheaper. They're absolutely not cheaper. Mm-hmm. Foreclosed homes in large numbers can saturate a market, mm-hmm. which we don't have. Currently in Las Vegas, short sales and foreclosures are 2%, which is literally the lowest. They were 40%. They were over 40% from basically 2008 until 2012. Mm-hmm. They're 2%. They're 1/20th of the number, and the notice of defaults haven't moved. Mm-hmm. Notice of defaults are basically the same.
Right.
As they've been the last 3 or 4 years. So all the fundamentals of housing, low inventory, not a lot of people selling, still relatively high demand. It is kind of interesting that we haven't seen more. I think, what did we say? We thought last year when like interest rates went up, we were predicting like 5 to 8% would be the most. We said it would go back in price like maybe a year's worth of prices, which could be up to 20%. Like we haven't seen that yet even. I think we actually I think still we could see end up, 8% peak to trough.
Yeah, I mean, I'm still really uncertain about what's going to happen this fall, because this fall you're going to have the double whammy. You're going to have maybe the recession and then the natural fall decline in prices. So we'll see what happens. I am a little concerned about that, but not crash bro level of concern.
I predict October, November, December, January will be 4 of the best months of the next 12 months to buy a house.
Okay, but you predict that every year.
I know, because it is every year. Historically, it is.
Yes.
And I also predict this. I also predict that next fall, the number of homes sold will exceed the number of homes sold last fall. So over month.
Okay, so you're saying that there will be more homes sold in November of 2023 than in November of 2022.
Yeah, I think the numbers of sales will pick up, and I think it'll be driven by some people finally decide. I think interest rates will drop. Mm-hmm. I think what will happen is the economy will start to suck, and then the Fed is going to back off rates, and then everyone's going to get super excited and dump money back in the market, and that 10-year Treasury note's going to tank. And I think we're going to get back to sub 5%. Right now, there are a lot of low 5%. There's like a 5.3% 15 year mortgage out there. I think we're going to get below 5, and I think once it gets below 5, people will move, and then more people will come in the market. There's a chart that I need to find to do a whole video on. The amount of cash that is literally sitting there is staggering. That people it's like the highest level of cash people ever had. Everyone's sitting on cash. And the cash has to go somewhere. And one argument for the cash is that it's just going to keep inflation burning. The other thing too is this other thing I saw that literally said that the money coming out of banks are going to be used in different types of assets. And I think real estate's one of the assets. You have people who try to buy gold and Bitcoin and things like that. But I think real estate's one of the things. So I think we're going to have this inflationary effect in real estate where we don't understand why, people a year ago that said the market would crash, and now we're still, like in Vegas, we're down a whole 3% per square foot. Mm-hmm. Why didn't it happen when interest rates have more than doubled? And I think that's why. I think this inflationary effect in real estate that we're going to, just like in the 70s, this happened in the mid 70s, in the early 80s. Home prices kept going up, even though interest rates were 17%. Nobody could figure out, but it was inflation pushing everything up.
It is. I mean, look, we say this all the time. People have to live somewhere, and you're going to make somebody's mortgage payment. Is it yours or your landlord's? So people make those choices. And, you know, the home ownership is still something that most Americans prize. And it's something that hopefully, culturally speaking, we will continue to value and aspire to.
Yeah. And like when the housing market did actually crash, it took out everything else with it. And it was speculation, overbuilding. I mean, you can't just build 4 million houses a year. We can't absorb that many houses. And everyone was over-levered on homes. You know, 70% of homes had negative equity in Nevada alone. Now today in Nevada, it's 1.1%, right?
Right. So,
With 1/70th the level of people underwater that we had back then. Right.
It's a completely different scenario this time around.
Yeah.
That's not to say that, you know, things can't go south, but right now there's nothing to indicate that's going to happen. So what do you think? Are you in agreement with the Crash Bros? Did we bring up something that made sense to you? Please like the video, subscribe, hit the notification bell, share the video, leave us a comment, and we'll see you on the next video. Bye.
Bye.